Hey guys, Bill Soriano here from Pittsburgh. And tonight I wanted to make a quick video for you guys. I wanted to talk a little bit about why you should cut your losses short and let your winners run. And so I've been talking about this for the past week or so during my trading sessions or my video sessions with the Sniper Pro and the ATH indicator that we use for our trades. That's our ATH RSI Sniper Pro 15-minute trading plan. And I've been reading Tom Hoogard's book, The Best Loser Wins. So I wanted to make a quick video tonight going over some of this information. So could you imagine winning 61% of your trades and still losing money overall? Sounds crazy, right? But today, this is exactly what's happening to most Forex traders. And I'm going to show you why cutting your losses short and letting your winners run is absolutely critical if you want to survive and thrive in the Forex market. So this video could actually be a turning point in your trading journey. Now, we're going to talk a little bit about going into some of the psychological and practical principles of trading, and we'll even dive into a huge study of 43 million trades and insights from the book, The Best Loser Wins by Tom Hoogard. So let's get into it here. So there was a massive survey that analyzed over 43 million trades from 25,000 Forex traders over a 15-month period. And here's what they found. On average, these traders were actually pretty good. They had a 61% win rate. So on average, they were winning 6 out of every 10 trades. That means they were correct more than half the time, right? Not bad. But here's the kicker. Most of them still lost money overall. Now, why? Because their average winning trade was only 43 pips, while their average losing trade was a massive 83 pips. So in other words, they were quick to take profits when they were right, but they let their losing trades run far too long. Now, this single habit completely destroyed their profitability. See, it's not about how often you win, it's about how much you win when you're right compared to how much you lose when you're wrong. Now, let's break this down. Why this happens, it all comes down to psychology. As human beings, we hate being wrong, right? We don't like being wrong. When we're in a losing trade, we start hoping, oh, maybe the market's going to turn around. I'll just give it a little bit more time. But the problem is, hope's not a strategy. Instead of accepting our losses and moving on, we hang on, right? Many times we move our stop loss. Sometimes some traders don't even have a stop loss when they take a trade. Uh, and then what happens is we watch that loss get bigger and bigger. On the flip side, when we're having a winning trade, we get fearful, right? We get fearful. We think, what if it turns against me? Let me take a profit now before I lose everything, right? Now, we do the exact opposite of what we should be doing. You see, we are hopeful when we should be fearful, and we are fearful when we should be hopeful. Okay, so this one concept is beautifully explained by Tom Hoogard in his book, The Best Loser Wins, right? And like he says, traders tend to be hopeful when they should be fearful, and fearful when they should be hopeful. So, what does this mean? Well, when you're in a loss, you should be fearful. That fear should drive you to make sure you have your stop loss in place and not to change it under any circumstances, right? You should want to cut that loss quickly and protect your capital. When you're in a winning trade, you should be hopeful. So now you should let that trade breathe. Give it some room. Let it grow. That's where the bigger gains come in. Now, Tom, he also emphasizes in his book that successful traders think and act differently from the crowd. They do what feels uncomfortable, right? They cut losses fast and they hold on to their winners. So this is the complete opposite. It is the complete opposite of what our instincts tell us to do. Cutting losses short is like playing defense in football, right? Your first job as a trader is to protect your capital. Small losses are manageable, right? We can live to trade another day, but big losses can wipe us out. If you consistently keep your losses small, say 1% of your account per trade, you stay in the game and you live to fight another day. Remember, the best traders are not the ones with no losses. They're the ones who manage their losses better than anyone else. On the flip side, letting winners run is how you make the big money. You don't get rich in Forex by taking small 10 pip gains. You get rich by catching the big moves, 50, 100, 200, 300 pips, and you let your edge play out over a series of trades. When you let winners run, you're allowing your risk to reward ratio to work in your favor instead of against you. Even if you win only 40% of the time, 4 trades out of 10, if your winners are 2 or 3 times as big as your losing trades, you'll be profitable. This is the real secret behind trading success, right? It's not about being right all the time. It's about making more money when you're right than you lose when you're wrong. Let me give you a quick example here. Say you risk $100 per trade. So let's say you have a $10,000 account. Your maximum risk is 1% or $100 per trade. If you lose that $100. You have your stop loss set and that's it, right? If you win, you aim to make $200 or $300. Okay, so you want your risk to reward to be at least 1 to 2, 1 to 3 at a minimum, right? Now, even if you're right only 4 times out of 10, right? On those 4 winning trades, if you're at a 1 to 2 risk to reward, you'll make $800 and you'll lose $600 on the 6 losing trades. So you're still profitable, right? If your average risk to reward is 1 to 3, then you'll make $1,200 on those 4 wins. You'll lose $600 on the 6 losses and you'll have a profit of $600. This is why it's so important to focus on the size of your winners and the size of your losers, not just your win rate. So the next time you're in a trade, remember, cut your losses fast, let your winners run. Okay? Don't let hope and fear control your trading decisions. If you found this video helpful, I want you to smash that like button, subscribe, drop a comment below telling me your biggest trading struggle right now. Okay, and if you want to learn more about mastering trading psychology, then you want to check out my other videos or grab Tom Hoogard's book, The Best Loser Wins. It's a game changer, guys. Thanks for watching, and I'll see you in the next video. Trade smart.